Hey, good afternoon. Trader Tim here from eMiniMind doing a Monday market analysis video. We have ourselves a little inside day on the ES, just meaning that the high and low for the day are contained within yesterday's or Friday's range. And a lot of times when you have a big body candle or a bigger range day, they are followed by either a couple of smaller candles in the form of like a bull flag in this case, where we bounce and then we have a little bit of consolidation for 2, 3 days and then break higher, or it's a true inside day where the high and low of today are contained within the high and low of yesterday, and we really don't have a lot of intraday movement. Maybe if the candle, in this case from Friday, is big enough, then you could have a range bound day that is also pretty big. And today was actually, 30 points range for the day was pretty big, but unfortunately, most of that range was contained into, I don't know, maybe 10 points. So we'll run through the day here in just a minute, but I wanted to start on the bigger time frame. You can see this low to high retracement that I have drawn, and then the high to low on the ES has broken its 61.8. So I do think there's a potential for us to come down and retest the 4,000 level. That's closer to the 61.8, kind of between the 50 and the 61 here. Because if we look at, here's the SPY, you can see we're on the top of the trend line, just kind of coasting there. But if we go to the Dow, we are within the 61.8 of the short. Yes, we've traded at the long, but we're also contained by the 61.8 on the short side. NASDAQ is not just within its 61.8, holding its 50, and it's actually the second retracement in the trend. So here's the first one, but puts there at the 50%, 334, rode that down, and then we traded all the way to the 61.8 and have the minus 61.8 rather, and now we're trading up at the next 50%. So on a lot of these trend breaks that then resume to the upside, we break trend. So when I say trend break, I just mean, something like this, where you draw a trend line and you break below the trend line. You trade at the first halfway back, like we did back here, and then you fail the 61.8 and go higher. And so it's sort of a minor trend break or a smaller pullback. This would be the major swing low back here at the beginning of March, and we're, well away from that at this point. And so a minor trend break would be just completing to this first negative 23% target from this little short like that, and then we would expect to fail the 61.8 and then return to new highs. In this instance, we have the Dow, the NASDAQ, and then if we go to the Russell, all holding that 50% as of today, Monday afternoon. The Russell's definitely in the weakest uptrend. It's really just been going sideways for really the whole year. And then the Nasdaq also not the strongest of uptrends at the moment, but since a lot of these individual stocks, your tech stocks have pulled back, we could start to see those stocks lifting the broader market. Your by and large, Tesla's probably the weakest of the main, FANG stocks. Tesla, FANG, Microsoft, Nvidia, the big names that are heavily traded. So as we look at the ES and look for some intraday opportunities, we do have this cluster of trading that's occurred over the last 3 weeks, kind of hovering above and below that 4150 or 4160 area. So if we return higher, I would watch for a potential double top. So like a 42.32, whereas the S&P maybe comes up and makes a double top where the Nasdaq holds its 61.8 of the full halfway back. So right now I have it drawn up like this, where it's the second one of the trend. Well, we could get a little bit of a rally, and it's not much higher, but it might be enough to take the ES higher to double top territory, and then the Nasdaq could roll over as well. But if we just go higher from here, then we do have a target on the ES from that 50% that didn't quite trade, but it's close enough, up at 43.23. So we're in some interesting times where we have, you know, news report or economic reports coming out that year over year have really nothing to compare to. So the expectation is already built in that they're going to be knockout numbers. And so if they're not knockout home run enough, you knock it out of the park, but you don't hit it as far out of the park as analysts expect, that's when you have some of these, kind of sit and scratch your head moments, especially with some individual stock earnings. So really not a super clear signal on higher or lower for the week. But that's okay. We really don't need that in order to be able to day trade. So when we go to the intraday chart from today, looking at the 5-minute, Fridays was a pretty strong uptrend with very strong breadth and advanced decline line. Today was a pretty blah breadth and advanced decline line. We had a little bit of a gap down, and then I drew from the swing high from yesterday's close or Friday's close to the morning's low, and that gave us a kind of a close to a half pullback, halfway to filling the gap up here at 41.65. Unfortunately, there really was not a 50% that followed that until we got down and broke the morning's low here. And that one did get a bounce, but it was the 53.25. It only touched 53.25. It didn't trade through, so that one did not get a fill. But if we go a little bit later into the morning, get rid of this guy here, you can see the 50% had a target at the negative 23 down here, which is about 41.48. And on the 512, you can see it down here. And so that made for, let me pull up my notes. We came down to the target. We made this little double bottom here. Unfortunately, this one pulled back and was just a tick away from filling at the long. And then we crossed that 30-minute mark. So this gray line sort of solidified the first 30-minute low. And then you can draw up the next retracement like this from the swing high down to lows, and you can see it break the 61.8. So that's where I felt the long like that off of lows, and the 50% lines up perfectly in this case with the bottom of the first 30-minute range. And remember, the context of the day, it's an inside day, and so expecting some range-bound activity with a breadth and advanced decline line that are very blah and close to balance, close to break to even. So going counter trend when we have just poked below the first 30-minute range and have now come back into the first 30-minute range. Really, the only thing we did not have here was a low tick of the day. So I was a little bit concerned that we could roll over, but it was at least good for a first target, and then you can trail the next 61.8 to get another couple points out of it before it ended up rolling over. And then at that point, so yes, the day's range thus far is about 30 points, but if you look at the morning after the first couple of bars, we really just spent the day down in the bottom half of the first 30-minute range. So it was a much smaller, choppier range than it led on. Once we completed that negative 23, then we did have the potential to have a full halfway back for the day, which would be the next retracement in the trend. So when this 50% trades down to its negative 23 target, grab that entry down to lows, and then that sets up the next setup. So, oh hey, it trades at the 5-minute, so that means we scroll over on the 512, look for a swing break in here, but before we got a swing break, we failed that 61.8 up here. And so, if you came in here and tried to short, you'd probably have looked like 57 trades up to 59, 58.75. So yeah, you'd be taken out before you got the rollover. So allowing the 61.8 to kind of be your signal of, hey, we have broken the 61.8. We're right in the middle of the first 30-minute range, and pretty much from then on, it just really there was not a lot of actionable activity. A nice little double bottom down here with no pullback. Um, did roll over for 10 points or so, which was a nice quick drop. But again, in the context of an inside day and being within the first 30-minute range, um, more often than not, you're going to get chopped up in these situations. And so rather than trying to make something out of nothing, um, I would rather just kind of sit tight in these inside days, as I like to call them. So just that one counter trend long, and then that was it for the morning. So the good thing about a consolidation day like this is, you get a couple of them, or sometimes just one, and it builds up enough momentum to where then you can have more breakout days. So let's say, okay, here's our recent low. We have these two green candles. Let's say today, tomorrow, and the start of Wednesday are inside days. Well, then Wednesday, that would be the third day of consolidation. Then we can look for a breakout to occur. So, you go through this ebb and flow of here's some consolidation, and then, a week like last week, which is absolutely fantastic from both a swing trading and a day trading perspective, and you just knock it out of the park. And then you go into a few more days of consolidation. Maybe there's just not a lot to do, and so it's okay to sit on your hands and just kind of preserve your capital, as the phrase goes, because then you're positioned for the next move. The same thing could be said for building up a pile of cash to buy an investment property. You're building up cash when times are good, and then the real estate market might slow down or the economy takes a crap, and that's an opportunity to apply that cash to buy a property at a steep discount, and then you're waiting, you're being rewarded for that patience, for patiently waiting, diligently saving up money to be able to invest in when the time is right. And so the same thing is what we're doing on the smaller time frames. Only instead of waiting for maybe a couple of years for some good deals to come up, you're only waiting, a week or a handful of days for some consolidation to take place before the next breakout or the next breakdown. So as we head into this week, let's see. Tomorrow. I think there was housing starts, but that's before the bell. Looks like e-commerce retail sales, which could be an interesting number. That's a fairly new economic report. And then later in the week, just the usual jobless claims and existing home sales, things like that. So we will watch for those this week. And tomorrow morning, we'll be doing a live trading session. So you can tune in over at eminimind.com/VIP. Have a great week, and we'll talk to you soon.